first and then to. Really ask him.
I went first to work, and then Bluetooth. Yeah. And he's looking.
What time is it?
Very empty, she lost her.
Yesterday.
Yeah.
That it doesn't go hurt me, but.
Look, it was pretty crowded, you know.
Oh, I didn't know this was open. I'm sorry. I didn't know that was open.
I have one day where like, oh, it's
That's why
okay.
it's still.
You want the Latin America? Just, you have to wait. Yeah.
Karen, do you have the live link? You're good?
I got the invite code and we're all set. Just getting it up. Just be a moment.
I'm gonna go get it.
Okay.
That would be. I meant to take tape, not to, we got first.
Hello, Susan. How are you?
I'm good. I am here early because I was looking at the clouds.
Well, I know that you would melt if rain drops.
For sure, for sure. I turn into the quick.
No, it's because you're so sweet. You know how water melts.
Sugar. I like it. I like it.
That part of those are like.
What has scared you about any?
So if it depends on. Because any part of. It may not be running. The rest of it has to go.
Your storms prepared, we are gonna be in this little site in order to you and I can both there.
Good area.
That's okay. I'm not leaving.
Make you think that this information that's out in this.
No.
You saw it
and should have gotten here for the
Life happens. You can stop it. Well, now, I'm gonna go because I went to all of them.
That's awesome.
No, you want some?
Yeah, I do that.
I don't believe it is. You want something? What else? I swear I just saw her out here hugging something.
Maybe she's speaking with Andres.
Okay, perfect. I hope.
So.
It's not us. So who are you looking for? Who are you looking for? Okay. Here we are.
Yes, I know. How is this? Oh, lovely. No, last night. Yeah. No.
Letting out the front rows.
Very well, thank you. How are you?
For having me.
Gusto.
Well, obviously we have new ups and downs, and I'd like to show you the clipboard because it's a little bit more of a.
There you go, how are you?
Doing fine, thank you.
Sure, if you will.
As I said. Sit, if you want to sit, anything questions, whatever's comfortable for you. So. It's your floor. And it's a little sluggish. And then that's in reverse. So you also have a practice. A competent file detector. This little hand and so. It's pretty. It's not like, got water here for you. I'm pretty sure it was great to take that. But. What I can tell you.
Do you want me to leave this?
Okay.
Section, I think will be enjoying the sort of following what they're doing is. Inevitably, they take their time.
For next week, our hands are ready.
And we've got a little soul.
I guess it gets warm.
Yeah.
I was talking for me.
The Westchester, the answer, but if you ask, then they call Westchester upstate. Yeah, it's right there. So their class schedule is different, but it's more moderate, right? So you wouldn't get this sort of swing of going all days and 70 and then 20.
Ya nos mandaron el aceitado. Espero que salga esta semana.
Make sure you heard all the questions.
Ahorita nada más.
There's a huge
It's not. No, it's not. It's a small business.
That works, that's why I need.
Desapareció el concepto de la
Si quieres para los
It's like a really
pero creo que los labios sentados mejor brillan. Ya los van a correr para después recomendar. Entonces hasta ahí jugar y no
The door, I'm sorry about that. I'm so excited. Have you ever presented in a tough crowd? Oh, she especially. So, yeah, and she only has like 0.1 players. So, básicamente me regañó muy bien. Intervención. Yo como. Y luego estaba en México y fui con las chavas que a veces voy.
Y siempre quejándonos de. Siempre podríamos hacer
Me encantó, yo no conocía. Sao Paulo. Me encantó. Me encantó. Me parece que es un país hay como países que pueden recordar mucho Madrid. Son como Ciudad de México. Interesante, something like the week ago. I'm already locked in.
So we have this.
Ayer yo llegué con mi Volví el domingo en la mañana, dormí en el avión.
When I was supposed to. I believe that we can figure out if that's.
Saving a few.
Thank you.
Okay.
Hello, everyone. How are you? On behalf of the Kellogg Institute, I am very happy to welcome Sarah Brooks, Professor of Political Science at Ohio State. I would say back to the University of Meridian because you were a Kellogg Fellow 25 years ago, right? So I'm so glad that we had a small part in your really important intellectual trajectory because
This is like middle school then, right?
exactly, yeah, middle school, like a very ahead of your time as a sixth grader. Because in sixth grade, your scholarship has really, I think, reshaped the conventional wisdom in political economy. And her work has really far-ranging implications for how we understand inequality, development, and democratic governance. Her earlier work on market reforms, most notably her book, Social Protection in the Market in Latin America, really challenged standard accounts about how market reforms were shaped by external pressures, highlighting instead the importance of developmental legacies and domestic political conflict in shaping those reforms. She then extended this agenda to understand how weakened social protections affected political behavior in developing democracies through this incredibly meticulous microdata collection effort in both Brazil and South Africa. Sarah was one of the first to demonstrate that income loss and exposure to crime systematically reduce democratic participation. She has also contributed enormously to work on natural resources, really having us revisit the conventional wisdom on the resource curse. She showed that we have generally treated this resource wealth as exogenous to both democracy and development levels, showing how problematic that is and leading us to conclude that actually resource wealth can help sustain good democratic and developmental outcomes. And most recently, she has extended that natural resource agenda to the study of critical mineral extraction and really thinking about the developmental trade-offs involved in that. Today, she's going to present on a third theme of her research, believe it or not, which is the relationship between global capital flows and democracy. While existing research, including Sarah's, has documented how financial markets affect policymaking in developing countries, the work she's presenting today really shifts her focus to something that has been largely unexplored, which is how financial markets affect voter preferences and shaping long-term trajectories in democracies. So before I turn it over to Sarah, I want to remind you that if you are a virtual audience member, you can include a question in the window below your viewing box. So Sarah, take it away. Thank you so much.
Thank you. Gosh. So this is a paper, co-authored with the University of Princeton and Rockefeller University of London. Kind of counter-normatively, I typically don't like when shouldn't present work that is published. Thankfully, it's not published, but just a week ago it was accepted, so it shall be someday published at Review of International Political Economy. But what we're doing is just suggested, we're thinking of a new mechanism through which market behavior can affect democratic politics, and really focusing on an extraordinary power of mobile capital or capital in general to affect democratic politics, in addition to some of the ways that it's known for some time. So this is just the roadmap where we're going. We'll give you sort of the overview, lay out the theory and the mechanisms that we test, both observationally and experimentally. The 2022 Brazilian election gave us an opportunity to jump in the middle between the first and second round of the election and have real election results, or real market responses, and run our survey before the second round, the two candidates. So, I'm looking there. Okay, so what we know, we've known for a long time about structural power of capital. We've also known that markets can react very strongly in rich countries and in the developing world to election dynamics. Even in the US, James Carville famously quipped, "It's the economy, stupid." And another time he said he wanted to be reincarnated not as the Pope or as a baseball player, but rather as the bond market, because you can intimidate anybody. And so if that's even the case in the US, that politicians are adjusting their message, worrying about market movements, very often accommodating them, but really to the center, particularly if you're in the developing world, you can imagine what that means if you are a small economy, capital dependent, that structural power is intense. So this is something that we've known a lot. What we're trying to explore here is the question of, what if there's another mechanism, not just the power to shape what politicians do, but what if the citizens are also reading the movements in the market in response to politics and changing their own assessments, and not votes, based upon market responses. So the markets are getting this extra mechanism in addition to politicians being afraid of and adjusting their messages, their positions. What if the citizens' votes are also taking either cues from market movements or simply trust that those markets know what they're doing and one candidate or the other would be better or not for the economy? So that's a basic outline of where we're going with this study. So again, we know that politicians and market actions can affect all kinds of public policy decisions. We know from the liberalizations in Latin America in the 1990s, the power of markets to discipline economic actors and political actors enhanced dramatically with capital account liberalization. The ability to, they called it that extra referendum on politicians of turning, either selling their debt off or selling their currency, can have really profound implications throughout the economy. We also know that voters care about the economy too. But we really want to test in this the mechanisms. How is it, and to what extent is it the case, that voters are changing either their intention to vote for one candidate or the other, their views of the competence of a candidate, and their feelings about the candidates, based upon information and real market movements. So this goes into the category of what we're talking about, like mass IPE, moving simply from capital flows to look at the citizens and their role in the, as they engage with the global political economy. So we have basically four broad hypotheses that we're going to test. The first one is just kind of, banal and plain. They have negative information about the candidate, they might feel negatively. Now this, what we want to do is go beyond that. It's the sort of whole genre of experimental work that says, tell a person something bad and then see if they feel bad after you've told them something bad. But what we really want to do is say, through what channel is that expression of bad happening? So this is just the baseline, this button. A little less effective than I was hoping, but the second is, well, people will have skin in the game, right? Is it simply the case that this is an egotropic, I am looking at the stock market because I have a portfolio of assets? Now, of course, it's not the case that most citizens in Brazil or many countries actually have a portfolio, but sometimes they really are thinking of looking at the economy, the broad economic trends as a measure of their own likelihood of either getting out of debt, being able to buy a house or do anything like that. So that's the material mechanism. And if they're really worried too, say you've got a lot of debt and you're worried that the economy is going to go down and therefore your ability to pay, especially if currencies, if you borrowed in a different currency, et cetera, more likely mechanism. Here's what's important and what makes Brazil a hard case, is that the partisan mechanism. We don't expect an experiment to really change the needle on hard partisans. And we'll show you how much it really didn't. But so we're really thinking that the people either undecided or uncommitted rather than the hard partisans, because we know from a lot of political psychology or psychology research that when there's negative information that counters your priors, people will often ignore it or even harden their resolve in their positions when you try to tell them something that's counter to their beliefs, deeply held beliefs. And another is the question of who's going to take that signal from the market actors. It might be people who both are reading the financial news all the time, who just simply trust markets, and therefore they believe that they are information-laden signals, and they're paying attention. They're looking at the stock market responses. So importantly, we're really not trying to say that citizens as humans are either egotropic or sociotropic. We're really looking at other mechanisms of the information signal and the partisan filter that will push back. And so what makes Brazil a hard case in 2022 is that by the time we got the first round complete, 91% of the vote intentions were locked in. These were two very well-known candidates, one the current incumbent, and the other had been previous president, having run for president and been a staple of Brazilian politics for a long time. So it was very unlikely we were going to tell people something they didn't know, or people didn't know anything about the candidates themselves. What we were going to tell them was what the market was doing, what market actors were worried about after the first round of the election. Okay, so here's a timeline on the right that I will have to confess right here that we didn't pre-register the survey. We were fussing over the IRB and everything like that. So the experiment is that's how it ended up at right. But so we got the IRB approval. After the first round of the election, Jair Bolsonaro performed much better than expected. And I'll show you what the treatment did, but the next day, the morning after the first round, the Bovespa index went up 5%, or that's the Brazilian real relative to the dollar, and the Bovespa, the stock market index, had its best day in a while. So markets actually did rally. Bolsonaro's his polling numbers had been tracking market movements throughout. And then after that first round, the vote intention, the gap narrowed. Lula had been much more ahead of Bolsonaro. He overperformed, markets rallied. we got it into the field. And then Lula won. Okay, so with the 2,500 citizens that we had recruited from an online base, we sorted them, randomized them into 4 different treatment effects, as you can see here. Actually tracking what those 4 hypotheses and baskets of hypotheses are that I explained more. Importantly, we did not use deception because for 2 of the cases, we had to say that our treatment was market actors are concerned that your candidate will do this or do that. And as you can imagine with the press and with a polarized country, you can actually find real newspaper articles that said market actors were happy, market actors were sad. This happens in the US too, and you see them hour by hour trying to explain the logic of the what the stock market rally really means. And it's all different the next day. So we gave them facts, including the record gains that the market actually did well. And this was a very powerful treatment as well. And then the interpretation. For this one, it didn't work as well because I think we have kind of conflicting things. We said market did great, but the interpretation from one market actor, financial journalist, was that Lula now will be moderating himself and moving toward the center. He's not going to do radical things because the market spooked him. So these kind of worked in opposite directions. So that wasn't a great treatment. And then, of course, the 2 that were saying something that investors were, in fact, worried about Lula and worried about Bolsonaro. So they were treated into treatment 1, 2, 3, 4, these 4 different groups, and our control. The outcomes, the dependent variables, we measured in a variety of ways. The first was just feeling stronger. And you like these guys. With splitting the group, of course, with Bolsonaro and Lula, 5-point economic competence. That's how it was measured. Vote intention in the second round. This was when we were wringing our hands about a lot, like, is this election interference? But turns out now Lula won by more than our movement of intentions. So we have a bunch, as I mentioned, there were several things that we measured rather than testing. Those were the pre-treatment variables, that we have some pre-treatment, that we have the treatment, and then we can look as an exploration at some of the heterogeneous effects of people who had higher education, gender, race, other questions like economic anxieties. This is another important one for the attention checks, which one would do anyway when you're doing a survey. What we found is that there were a lot of non-random attention checks that were failed. In other words, systematically, when a Bolsonaro voter, and it happened for Lula as well, was told a negative treatment about Bolsonaro, market actors are worried about Bolsonaro's treatment of the economy, they were much more likely to fail the attention check. They sort of tuned out from that treatment when they saw something negative about their candidate. So this creates a problem, right? So if we just did a regression on the people who complied, when the compliers are not random and compliance is sorted in a systematic way, we had to deal with that. And so we did. I'll get to that in a minute. We just did an instrumental variable with the intention to treat. Should I go? Okay, here's the findings. So, and I'll show you this in pictures in a sec. What we found is that a pretty significant effect of moving someone's assessment of the candidate, particularly in the market response, that Bolsonaro did better the day after the election. The people's views of Bolsonaro's competence after we told them about the market movement after the election, went up 4 to 5 percentage points. Just pretty significant. And the same measure, that same treatment that said markets rallied after Bolsonaro did better than expected, assessments of Lula went down. And again, what we're really working with here are those, 9% of the people, the undecided or the independents, not the hard partisans, who are very difficult to move, and even if, you bludgeon them with a treatment. So 5 to 15% of one standard deviation. So these aren't huge. And again, we're not moving the partisans, but in terms of the overall treatment effect, that one was pretty significant. Similarly, though not as big, but the investors worried. Just a qualitative statement about investors are worried about Lula spending too much on the federal budget limit, and Bolsonaro as well. So those negative ones also decreased the assessments, both of competence and the feeling thermometer. And here you can see how those impacts came out. Again, once how these effects varied across the hard partisans also is pretty important. If you're a workers' party, the PT party ID, Lula's competence is going to really give you strong vibes. Whereas if you see the treatment about something good about Lula, or Marcus worried about Lula, the partisans on the right are like, told you so, I know it. So we thought that this was interesting in the context of, like I mentioned, a pretty hard test of a polarized country with opinions kind of locked in. So there's a lot going on here, but everything to do with the outcomes of Bolsonaro are on the left there and Lula on the right. The blue are statistically significant. So you can see if we just take the economic competence, if we want to look at market reaction, you see systematically that Lula's competence and the feeling thermometer fell when we point out about the stock market rallying after the first round of the election. And similarly, you see Bolsonaro going up in their assessment of him. Very little action on the second round vote, except over here for Lula, which investors were worried about. Bolsonaro did sort of move the needle slightly on that. Again, the filled in circles are the ones with the pretreatment covariates. As you can see, the error bars are getting smaller, so the controls was helpful in that respect. Okay, so vote intention. Now, again, the good thing is that we don't think that our little surveys had an impact on election rigging or anything like that. And moreover, our goals and our hypotheses were not about the outcome predicting which way it was going to go, but rather about the mechanisms. The extent to which we moved the needle didn't come close to the margin. So as I mentioned before, we had this problem of compliers who were non-random compliers, right? The hard partisans were skipping the attention check when it was negative to their candidate. So what did we do? We took we used an instrumental variable, or 2 squares, to instrument the compliance or the treatment uptake by assigning, because we knew who they voted for in the first round, we interacted that with the intention to treat, like which treatment they were sorted into, and that was our instrument to take care of that endogeneity problem. And interestingly, it actually did show clear results when you're accounting for compliance that or non-compliance with the attention check. We saw the rest of their answers and the treatment effects, but having failed that attention check and accounting for that, like who is actually just really hardcore about this, we feel like it made an improvement in the point estimates and the effect sizes. Okay. Again, just looking at some mechanisms, these were just the characteristics of the individuals that we measured pre-treatment. And many of these are not surprising. You can see that people who are more anxious respond more strongly to worries about one candidate or the other, and also market movements. Again, thinking that, boy, if I'm anxious about it now and my economic prospects, we could be at the edge of a precipice if this candidate gets it. That one had, again, as it says there, it shifted. That's the economic fear that they were worried. Asset holders. Again, I mentioned at the top that the people who actually hold, stock portfolio are very few. So to have any power behind this sort of skin in the game treatment, we oversampled at the higher income to try to get that, and of course weighted them down. So we could actually have enough asset holders to see, like, is this a relevant mechanism? That the, where are we? Yes, the non-holders also moved, but not nearly as quickly as people who have that asset that they were likelier thinking that they were poised to lose. So that has, but again, as it says there, the sense that people aren't just blindly following, well, not everyone is blindly following their partisan interests, but rather that there are people who are voting for or reacting to the markets with the thought that this has something to do with me. We asked several questions just to understand economic knowledge. And as many of you know, if you come from Latin America, a lot of people know the exchange rate to the dollar. Turns out, I can get it more quickly from a taxi driver than I can from, the Financial Times. But so that one was just so plain that everybody had good knowledge of the exchange rate to the dollar. So that didn't sort anybody into high or low knowledge, unless you compared them to an American, and then they'd be really killing it. But not everyone knew the overnight interest rate, the Selic rate. So that actually allowed us to get some sense of, who is really paying attention to these things. So a lot of them, a lot of these were just efforts to explore. This is an exploratory analysis of the mechanism. So what really is going on here? Is it non-rational partisan? Is it pocketbook voting? Is it worried about the economy as a whole? Those kinds of things, we try to find the characteristics of the individuals that would give us some leverage on that broader question of through what means and for whom are these market responses to politics effective? Even more mechanisms, even more. Party ID. This was again what we expected and what we found, that very strong partisans, because we had them talk about how we had to like our feeling about the candidates. We had their first round vote, and we had their really strong or really weak as a continuum. Then we just made them binary. So again, this was the financial knowledge of the overnight interest rate. And that sorted those who were getting the Bolsonaro's competence assessment. And it's possible that because he okay. So again, it's possible that one of the things that we found that we were quite impressed by was that a lot of these effects were symmetrical. It wasn't just that a candidate specific. If we divided them in terms of is it a candidate individual effect? Is this something that they assess Lula with market reactions, but they don't with Bolsonaro? And we found that not to be the case. They were quite general to the market responses, not for hard partisans, for anyone, but it wasn't asymmetrical that markets were moving their opinions of one candidate or the other. We thought that was really an interesting and curious result of this analysis, and I'd love to hear your thoughts on that. We didn't do much with it, but it does surprise us that the left versus the right, you don't see disproportionate effect of market movements in this context. So just to stop it. The broader question, of course, is do market movements have the structural power to affect elections and democratic politics, not just directly through those in office, but through the citizens' assessments of those in office or running for office. Again, the effects were modest, particularly given the very polarized nature of the society and how late we were in the campaign, where there really wasn't a lot of new information to provide, except the new things that came with the market responses immediately after the first round. And that's what we were trying to test here. Again, with that exploration of mechanisms was mainly observational. The experimental treatments, though, are where we really sort of want to hang our hats with the analysis and the result, and hopefully theoretical contribution. And again, I've already explained how we dealt with the non-compliers and the partisanship question, but it also does give us a sense for really the role of information in the context of a highly partisan, highly polarized election. The limitations are clear, but we thought this case might be justified in the sense of it being a very unlikely context in which to discuss whether elections can be affected by market movements. It's also a country where market movements in response to elections have been historically quite strong, especially when Lula first started to gain in the polls in 2002, when the markets, capital was fleeing, the sovereign risk ratings of the credit default swaps. IMF came in and they all had to sign a letter of intent to the IMF. This is not really hypothetical, but it's deeply consequential in young democracies. And this also brings us to the scope conditions, which is that not in every country this is going to be quite relevant. We even, as I mentioned, oversampled on the higher income people because so few people actually own stocks. But I think anyone who's an adult in Brazil and many countries knows the power of an economic and the reality and potential of an economic crisis to affect their material livelihood. So that is this is just basic summary of the study. And I had a few other graphs if you'd like to look at some things in the appendix. And I look forward to question and answer. Thank you.
Thanks, Sarah, for this great presentation. I thought the finding about the strong partisans being less responsive to the market signal is fascinating, especially because of the contrast that you raised towards the end of the 2002 versus the 2022 election. Because in the 2002, we really saw a big effect of market signals on voters. And here you're finding with experimental evidence that that's not the case. So I kind of have two questions. So the first one is, do you have a sense about how the strong partisanship finding interacts with the economic worry indicator that you have? Are strong partisans that are very worried economically, are those reacting to market signals, or is the effect even weak for that subgroup? I don't know if you have that in the back of your mind. And then I was just wondering, like, could you tell us what you think this says about structural financial power? Because increasingly we're seeing like very polarized societies and democracies, right? I was thinking about like the parallels with the US. So does that like invite us to like really revisit our understanding of structural financial power when you have increasingly strong partisanship?
Right, and I've thought about that in the US context as well, where we do have the narrative of that some voters just don't vote in their interest. Donald Trump could shoot someone on the street and he'd get more votes, that kind of thing. And I think one, I guess, part of the scope condition is that for a context like Brazil, the possibility of the broader macroeconomy or the stock market actually affecting what people experience themselves is going to be more powerful and more realistic than when we see the stock market going down. I think a lot of Donald Trump's voters wouldn't feel that that matters to them. So I think there's a condition in which the macroeconomy has that capacity, a much greater capacity to wield that structural power in a country where the possibility of an economic crisis, possibility of your currency tanking is meaningful and direct for them. And so I think that's why the strong partisans were much weaker on most of those impacts of the treatments, because whereas in the US, the strong partisans would probably just ignore it and say, we trust in the government, or let's give them a chance. So that would be, I think, part of it, that we should see a stronger structural power in some countries rather than the other. Whereas partisanship in a polarized country like the United States really, I think, has pretty strong ability to tune out that information. So it's not kind of permeating through in the way that it would countries Brazil. So the strong partisans also diminished the effect. Even if they were worried, they were sort of ignoring some of that. And I think that was one where I would expect a heterogeneous effect. I'd have to go back and check that with more of the lower income citizens who are more likely to be both Lula and in a position of anxiety. Because having oversampled with a higher income, we ended up with more Bolsonaro voters in the sample, and thus, weakening, I guess, the distribution of education and other things as well.
Hi, thanks, Professor Brooks, for this interesting presentation. My name is CEO and I'm a PhD student here. So what I have in mind is how important it is about how the incumbent is framing the financial market, because this is what we see in the United States is after Trump is elected, Republicans say, look, financial market is a good indicator of economy being good. And then when the market drops, they say, no, market is not a single indicator of what economy should look like. So this clearly will give us an impression that the people's impression of stock market or financial performance will be manipulated by the incumbent. And that's probably more important in situations where we have controlled elections. So not purely free election where comparative authoritarian regimes actually control the media or have a strong influence on media. So I'm wondering how much we can expand this result to these contexts, and do you think that would be deterministic or because we find things about partisanship so it should be covered? So I'm just curious what your thought.
Mm-hmm. Right, and in response to my other question, I was visualizing the way that the Fox News media has been sort of filtering stock market gyrations, the cost of gasoline, things like that, electric vehicles. Like, there is a profoundly powerful role for the media that I don't think we did ask people about which newspapers that they were looking, because few countries are like completely neutral in terms of newspapers and magazines. I don't know if any are as partisan as ours and polarized, like very balkanized into that we don't have a national narrative. But I think that's something that would really dampen the effect of any sort of third party source of information, right? And we tried to choose the economic one, the market responses, as something that it could potentially affect everyone. But to the extent that they are also already in a sort of silo of partisan filtering that can be so powerful, that message I think would be very, very hard to get through in the US context again. But again, that would be part of the scope conditions in terms of that reality is also going along there where people's day-to-day life isn't affected in the US as much as it would be outside where the vast majority of the world lives. That's not in the rich countries. Thanks. Yep, that did it, Scott.
Thank you. As always, excellent. Let me ask maybe three quick questions. One, you said that one of your scope conditions is a polarized society, but did I get that wrong?
If I did, I'm sorry.
But the whole thing, the experiment might work better in a less polarized context. So
Yeah.
Unless I misread that slide, I didn't quite
Yeah,
get that.
the main scope is in terms of the level of development of the country, right? And the role of, depending upon external capital. We did ask questions about domestic versus foreign investors and went around in a few circles about that. But polarization, I think, is just simply something that made it more difficult.
Yeah.
And defined it, as you're saying. And that's what made Brazil a hard test, maybe not the best test to generalize from. But that would go back to the question of like the information being so balkanized that, I think that if I said that was a scope condition, I apologize. But
I mean, you could make the case that the fact that it's a hard case makes it a better test, right? Because if a finding holds in a difficult case, then it's more likely to be generalizable. If it holds in an easy case, then you don't know. So second thing, I wanted to ask you about partisanship in Brazil, because the standard convention is that it's, yes, an extremely polarized country, but with, except for the PT, very weak partisanship. So I just, how did you
so yeah, and I think maybe partisan isn't the correct word because, of course, as we know, the weak partisan attachments to party, but not to person, right? So Bolsonaro has, a cult of personality, and so does Lula. So I think in this case, it was simply the attachment to the person rather than to whatever the Liberal Party stands for. That we see, I don't know what a better word would be, but the attachment to this, it was both like very different messianic type of politicians. We saw that when Bolsonaro's people were charging the government to overturn the election, and then Lula's people has a pretty strong background when he was in jail. So yes, partisanship isn't about the party in this case; it's about the person.
So what was the question then about partisanship?
It was how strongly are you attached to this party, like weekly, and it went all the way to very much. So we did use the measure was about the party, like PL is, for Bolsonaro and PT, but it gave them a chance to have a continuous variable of their intensity of their voting. So some people would vote for Lula, and we couldn't really use that as well, because that could be, again, they had to, or they didn't spoil their ballot or something like that. And so the partisan word, the measure might not match the concept that as I just articulated it to you.
Yeah.
Since we asked about party, and it's really about person. What would be interesting though is to look and see if there are heterogeneous effects. Like if I just split the intensity of partisanship across the PT and the PL, I could test whether that is, and then interact with some dummy variable for the party or something when we had the intensity. But we ended up not doing a whole lot except sorting out the hard partisans and noticing that they were much less resilient. So we turned that continuous into a binary.
And then my last question, thank you. My last question is, this might have been clear in your presentation, it probably was, but it's not clear in my mind. I mean, especially given, what you've just said, there's so much overlay in the Brazilian context between a thermometer, right? Pro-Bolsonaro, anti-Lula, pro-Lula, and what you described as partisanship. Did you need to disentangle those two variables? I mean, it just seems like those are highly correlated. Like very intuitively, they seem like they would be extremely highly correlated in the Brazilian context.
Right, so a strong Lula is strong pro-Lula is strong negative, something like that.
That and also strong Lula maps extremely closely onto your PT variable. But so how did you disentangle the two? That's my question.
Well,
the thermometer and the partisanship.
Well, we have the first round of the election, how they voted in terms of, and that doesn't tell us anything about the intensity, right?
Yeah.
So the partisanship would be where you vote, and then the intensity would be, and we took that, just that endpoint of like strong, and so we know who's strong or not.
Got it, thank you.
Do you have any insight into the asset allocation of the voters, or were there any other investing trends you suspect with that?
Oh, what they invest in?
Yeah.
No, I know we had a measure of like the this is the I was wondering if I put in the descriptives. No. Yeah. So I don't, we had, one of the anxiety ones was about having debt, people with debt. Otherwise, we don't know what they're investing. I would imagine for most people, it's their house or something like that, property. Many others. Oh. Yeah, this is where we took, I made sort of the binary variables and can play around with that a little bit more. Yeah.
Very nice presentation. It's kind of half-baked in my mind, the question that I'm about to ask you, so apologize.
Maybe the presentation too, so.
So I'm interested in this third treatment, the market signal after Bolsonaro did better than expected. So it seems to me that, I mean, that could be a market signal, I guess, but why did he, what's the reason for why he overperformed? Did better? Are there some, so what I'm thinking or perhaps worried about when it comes to the external validity, maybe it was just momentum of the campaign. So it would have been interesting to see kind of the placebo treatment where you didn't present the market response, but just the electoral momentum.
Right.
As the treatment to see if, what did the market do and what did just the other factors.
Well, we do have a table of just the observational data of the market reaction, the country risk reaction, and then the polling, so that we can just visually inspect. And I wish I'd pulled that one up here. It's in the appendix. But they, in general, when the stock market went up, it was actually the case that both of them had a blip after the first round. It could be that people were dropping out, like, so they had to consolidate on Lula and Bolsonaro, right? They were the top two vote getters. But he did, Lula's lead did, collapse when that happened. So I guess the if the question is about, should I?
Yeah, the reason Bolsonaro did better than expected.
Oh, is it just momentum or pulling? So he was really going all over the place, and so along with the stock market. The reason, I mean, maybe it was just that the polling was inaccurate. We do have unexpected election outcomes. But I believe if I look at the trajectory, it was not that he was on the upward swing, but that is an excellent question too. Let's see, can bring some empirics to this. Because that would be an interesting alternative hypothesis to say, if we just turn out the time series, bring it back a little bit, you will see that it was on its way up and something else was happening in the world. So that could be, that's an interesting confounder. This was what I was describing, if anyone didn't see.
Back in the day, you could put it on the slide projector.
Exactly. It looks like there wasn't a lot of momentum like right before the second round, but actually with the first round vote, then he came up to a whole different equilibrium there. So maybe a little blip, but then it had flattened out a bit. That is an excellent question to think about. But you can also see that both of them, even Lula got a little blip as the stock market went up and then plunged back down.
Yeah, so the question of students, I'm not sure but I just want to ask on this. Do you think like historical and cultural values may have to do with the trust in foreign investors rather than just at the voter or non-voter? Because I know Brazil is, I think it's like top 5 countries that rely heavily on FDI. So they've grown up with the trust in foreign investors already. And it has maybe potentially has nothing associated with the voters or they trust in the politician themselves. Just consider about co-founding, yeah.
It's interesting because our prior was the opposite. We were thinking that because there might be a negative balance about foreign capital that comes and goes to the country, like not FDI, but as much as sort of like stocks and bonds and buying your currency, speculators. So we thought that when we asked just about if we had used foreign versus domestic, it would confound 2 different things, right? But that's interesting because we were imagining or predicting, thinking that it would be something that would make them angrier rather than informative. But you can also say that about capital in general. If you're a poor person, you might have this anger about those people who make a lot of money and ruin the economy sometimes. I don't know.
Thank you. This is kind of a broader question, thinking about other cases, and you already mentioned the campaign, but thinking about other campaigns. When would you say is this really most likely to influence the course of a campaign, right? So is it just when you have extreme fiscal policies and that's when international markets come in, but if they these 2 leading candidates don't really diverge on fiscal policy, we wouldn't really expect the story to play out? Just kind of question. And second, to me, this seems to be kind of reinforcing, what we already see then domestically, right? 2 polarizing extreme parties or candidates running against each other. And then on top of that, you have, an international investment as another factor. But it seems to me that it's more like reinforcing this kind of polarization dynamic that plays out in a campaign. Or could it also be that sometimes it really is kind of orthogonal to this polarization on domestic policy, and then you kind of have this additional influence of international investments and expectations of market reactions that would really counteract some of the domestic dynamics.
Right, and we should actually make that another proviso of the study because our core assumption was that there was a lot of material like interest, and that is a key thing dividing this country. Other countries maybe are dividing over something non-economic at all, a war or communism or something, that this would just be nonsense, right? So I guess another part of the scope condition is we're thinking about countries in which, elections are very often fought on economic policies. And that's not the case everywhere, where it's very, very different in terms of the terms. But as like highly unequal class-based societies, going back to the income curve again, very often that's going to be a salient either determinant of someone's political identity or vote. And so it's interesting because that was just such an unspoken the people who study political economy, isn't it all about the economy? James Carville told us that. But yeah, that's a good point, that if this were about war, Palestine, communists, or whatever, it would be so what?
Either party or candidate do anything that influence the market by changing policies, reacting to the market, or anything like that during that period?
Lula is more frequently doing that, very often moderating positions, signaling, because again, you learned in 2002 when the market, when he was really looking like for the first time in 4 elections, he might win, signing an IMF letter of intent to calm the markets, promising that he would keep Fernando Henrique Cardoso's economic policy in place and agreements. He very explicitly does that. I think Bolsonaro was actually trying to play more on the nationalist or command of the economy and like genuine economic fear of Lula. So making that class-based, I've done so great, he's going to come back and ruin the economy, that type of thing. But I think Lula, because of his experience and knowing the power of market, played much more strongly into that economic, the effort to moderate his position, which he had done in the past. Before I go for seconds, Anibal, did you almost go ahead? Okay.
It's just kind of the thought that came to mind after your thoughtful response. I was thinking of Liz Truss and the UK primaries. I mean, it was kind of 4 or 5 years ago where the Conservatives had their internal primaries, and it was even within the same party that the parties diverged in terms of their fiscal policy. It was a huge conflict within the party. Liz Truss prevailed. I think she stayed in office for 2 months or something, then she had to resign. But just kind of thinking about even the scope conditions of your argument, it can even apply to primaries, right? And when really on some specific issues, these candidates diverge, and then the international markets even already elect or react before they even elected within the primaries.
Oh, that's interesting. And then that would help control for some of the partisan dynamics.
It's the same party, yeah.
And in Brazil as well, with the open structure, the open list ballot, you also have a lot of inter-party competition, but that's all bound up in a lot of things as well. Who has the taxes? All right.
Thank you, Sarah. This great project. I'm looking forward to see the published paper. So I guess my question connects with some of the questions that were asked previously. It seems to me that for these voters, there are 2 possible mechanisms, kind of causal stories that they are running in their heads. One is about welfare. So the market signal tells you if it's bad, it tells you that your welfare situation is going to be worse after the election. And if it's positive, it tells you that your welfare is going to be better. And that's to some extent irrespective of whether you like the candidate or not, right? That's kind of an objective signal that tells you who is better objective. But there is also kind of the story about credibility, that it's about it's about you can think about competence, right? Or so the market, you are using the market information as a substitute for your limited information. You say, well, these guys know a lot, and so I will trust that they are telling me who is a good candidate. But so it seems that the first one is more based on structural factors. So that was kind of your logic behind, right? If you have assets, then clearly you are exposed. So if markets go bad, you're going to suffer. If you're a Trump voter and you're in the US, you're kind of protected because the country is not very exposed to international shocks, or less exposed to international shocks than other countries. So that's kind of a structural story. But the second story about kind of competence and credibility is more of a political story. It can be manipulated by candidates. So in this case, you don't have extreme left candidates, but I could imagine an extreme left candidate kind of building the argument that the markets are reacting because I'm the right candidate for you, right? Kind of like
Right, they should be scared and they are, yeah.
So I guess my question, which is highly speculative, is to what extent do you think that there is this kind of structurally determined or can be politically controlled by the candidates?
Yes, so first I thought it was going for the egotropic or sociotropic. But yeah, it is the case that for a lot of people, their own welfare is tied to that of the nation, right? And you're saying that partisanship might short circuit that, particularly if they're running on a different type of platform. And I think that's why, you know, we're really playing for those who hadn't committed, like the people in the middle of the polarization that they either didn't know or they didn't like either party, plots on both your houses type of thing. But we really didn't want to really commit to one or the other. That's why we have the sort of the delegation of information, like elite cue taking. I don't know, but they might type of thing. And we didn't actually use a lot of ideological questions, any for that matter, rather than just asking about their partisanship. But yeah, I think both are at play, and that's why we were maybe, well, we were lacking any commitment to saying this is structure or agency or something like that. But I think what we did underplay a lot was that the other dimensions of the partisanship, whether there's something else that they can get that attachment. And I think they did. So Lula and Bolsonaro have, again, those very different stories. And those people weren't moved a lot by the thought of their welfare. It was already baked in and they already knew that they wanted Bolsonaro or not Lula or something like that. So that's a case where I think both are at work. So we're not committed to it being one or the other. And maybe that's, theoretically too lacking in courage, but that's kind of where we landed with the theory that humans can respond through a lot of mechanisms, and let's try to test what those might be, which certainly aren't exclusive. And I think a lot of these comments were suggesting that there are so many other factors at play. There could be different dimensions of political conflict, other things that the market or the politicians have done to try to shape that narrative. But yeah, I think both are at work.
I was just curious about thinking about shortcuts that people might be using to think about this, because you mentioned that the exchange rate was something that was very well known by everybody that you surveyed. And for example, in recent the past few years in Mexico, the government has been very insistent on that we have a super peso, in the sense that we don't really care about how much the economy grows or not, because we have a better exchange rate versus the dollar, which surely has a lot to do with them. And that is perceived as a great achievement. So you see in social networks very often them saying, look at how neoliberal governments had this exchange rate that flew to the skies, and now that we have this new government, it is much different. So I was thinking, isn't this sort of a reading of the economy that has nothing to do with economic performance, but that sort of gives a cue to that idea to the voter? Is that something that might be happening here, like cues that are not necessarily related to the market itself, but to things that are more visible?
Like, I thought we were going to go with the national narrative, like the super peso, but something more visible in their daily life, such as the power of the peso exchange rate.
So something that is being talked about, yeah.
Yeah. Okay, so the I guess narrative or the terms of the election would definitely be that sort of thing. And if say Moreno could just take that like whole topic off the table, then it's not going to be a salient source. This wouldn't be a good test for that. But it's also, again, like some of these things, by just giving them the factual, like not then later with the interpretation was trying to pull it back, pull this right to the front of it and remind people either of the past when it really did systematically and like profoundly hurt people when the election responses cause economic chaos and investment leaves, interest rates go up and that hurts them like a lot. So yeah, I think that's absolutely the case. Come up with a lot more scope conditions.
Anyone else?
Sarah, thank you so much.
My pleasure. Thank you all.